Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. We begin today with a potential deal that would create the world's largest mining company. Glencore is in talks with Rio Tinto Group about a merger. Now, a little over a year ago, talks between these two collapsed. But today, Glencore said it was in preliminary talks with Rio, and the options included an all-share transaction that would see Rio essentially buy Glencore. And then later in the day, Rio confirmed those talks. Glencore and Rio both own large copper assets. In the U.S. equity market, we saw a rotation out of big cap tech and into smaller cap shares. We had the NASDAQ composite down about 0.4%, but the Russell 2000 jumped by more than 1% today. And in the Asia Pacific, it looks to be a mixed picture for stocks. We're seeing positivity in Japan and choppy trading in Seoul. Let's bring in Bloomberg's Winnie Hsu. Winnie covers Asian equities, and she joins us from our studios in Hong Kong. Thank you for being with us. Happy New Year to you. It's been a strong start of the year for equity markets in your region. What have been the primary drivers?
Yeah, I guess this year, like you mentioned, it has been a very strong start of the year for the region. And we're seeing key drivers really being still that AI engine, right? You're looking at Kospi and also Taiwan's TAIEX index hitting fresh new highs with the help of Samsung Electronics and TSMC. So that is still the key drivers for our markets here. And you are still seeing that rotation away from U.S. assets and into the Asia region because of better, more attractive valuations, earnings prospects. And that's why you're seeing that Asia actually is still outperforming the U.S. so far this year.
Well, here in the States, when you talk about AI, there is a lot of concern about extended valuations. I'm not getting a sense right now that that's a big concern in Asia, or am I wrong?
Yeah, exactly. It's less of a concern because those high valuations are mainly in these U.S. major tech names. But when you look at Asia, actually, we are seeing price earnings ratio for example, the MSCI Asia Tech Index about 17 versus 25 for the NASDAQ 100 index and also 39 for the SOX index. Mm-hmm. So you can see how valuation-wise, Asia names are actually way more attractive than the U.S. ones.
So you mentioned Samsung. We just had operating income and revenue numbers that were delivered on Thursday in Seoul. Talk to me about the story in Samsung. I know it's such a big company, obviously, for the Kospi. It's a big contributor, but whatever happens at Samsung seems to permeate across the region, right?
Yeah, exactly. Just like you mentioned, because it's such a big company in South Korea and also a big representative of that AI strength in Asia, we do see a lot of the spillover effect from this company. You were talking about their earnings, right? Mm-hmm. And the latest quarterly earnings actually showed profits tripled to a record high. And that's being driven by their ability to hike their memory chip prices. And that goes to show that the demand for AI and also the demand for memory chips are really still very strong. And like we had at the CES Las Vegas comments from Jensen Huang that there is still kind of a lot of demand behind these memory chips. And hence, it's so important for these Asia supply chains to be able to serve that demand. And hence, we're seeing that strength in these AI names in Asia.
So Huang is obviously the CEO of Nvidia, and we know that company uses as its key foundry TSMC in Taiwan. What kind of price action are we seeing lately around Taiwan Semiconductor?
Yeah, so TSMC is another very exciting one that we're seeing so far this year as well, because we are going to have their earnings next Thursday. So a lot of these price hikes by different analysts across Wall Street has been happening in the past week. We're talking about Goldman Sachs, talking about Macquarie, all raising target prices through this week. And they were talking about how AI is that multi-year growth engine for the company, and hence they're expecting a better earnings and better revenue driven by that solid demand. So TSMC has been, it's about 40%-ish, close to 50% at this point for the TAIEX index. So the kind of the boost in the stock price also helped the overall TAIEX index to reach record high levels as well.
So this has been a big week for geopolitics, particularly when you consider the situation in Venezuela. And at the same time, we've got these simmering tensions between China and Japan. And that, I think, was the bigger issue for markets in the Asia Pacific, not the Venezuela story, even though, as you and I both know, China is a major importer of Venezuelan crude oil. Talk to me about what's going on between China and Japan and the risk that this is kind of created for markets, not just in Tokyo, but perhaps in Beijing and even in Hong Kong.
Sure. So to your point about Venezuela, I think what we're seeing right now is that as long as there's not a major shock to the supply chain, markets are brushing off that part of the risk quite quickly. And what we've been seeing over the past year is that markets are getting more used to these geopolitical moves and that they are digesting these risks relatively smoothly. But when it comes to China, Japan, like you mentioned, it has been escalating quite quickly. Although at this point it doesn't have a big shock in terms of the broader market, it is affecting different sectors that were mentioned. For example, this week around, the latest development is that China is launching this antitrust probe into Japan's key semiconductor materials, and we saw that these sectors in Japan are actually falling while the ones in China are rising. And China is basically saying that Japan, by doing this, it's hurting the interest of China's domestic industry. So you can see how, the relative sectors and the industries in the different countries are moving different directions based on just kind of the ongoing tensions between the two countries.
So you mentioned the semiconductor industry, and I think that's great because at the end of last year, we had a couple of big IPOs, new chip makers in China that were issuing stock on the public exchanges. Is this something we're going to see a lot more of this year? A lot more in the way of initial public offerings, not just on the mainland, but in Hong Kong as well, do you think?
Yeah, so the IPO market has been a really hot topic and a really hot market since last year. And that's also what we're going to expect for this year. And the focus is a lot on tech, is a lot on AI. As you can see, the two latest blockbusters that we saw from China, Meta X and More Threads, they were overly subscribed and there was a lot of hype and excitement, especially because this time around the government is behind this in terms of kind of how they are supporting further development in the tech industry. And that's being driven by how they have right now a big focus on this tech self-sufficiency, and that they, especially with the tensions going on with the U.S., they want to put more focus on this. And we can see that in their latest 5-year plan as well. So we're expecting further policy support to drive these successful IPOs in the AI theme, and that China to put more focus and more resources into boosting their tech industry.
Winnie, when you talk to the folks in your circle, the analyst community, many other people who are in markets in Asia, what are they saying about the outlook for 2026 and where are they focused? Are there themes here that may be a little surprising, or is it going to be a little bit of what we saw at the end of last year?
Yeah, so for this year around, I would say that the biggest theme is still around AI, right? There are lots of opportunities, but at the same time, there are also more risks, whether it's that potential AI bubble risk, the fact that we might not be able to see monetization as fast as possible, or that spillover effect if the U.S. tech actually sees a bit of a pullback, just because how much concentration we have in these Asia tech names throughout the year. But another key topic that people have been talking about, obviously, is still that central bank path. We're talking about the Fed potentially cutting rates twice, and that's going to provide further room for these Asia central banks to cut rates as well. So that would provide tailwinds for countries, especially in Southeast Asia, like Thailand, like Malaysia, for example. But on the other hand, we have banks like the Bank of Japan and also banks in Australia and New Zealand, a bit more on the rate hike path. So that is likely to weigh on some sectors, especially as these countries tackle inflation. So we'll see how those central bank path kind of diverge in Asia and how that affects the different stock markets and sectors in our region as well.
Okay, Winnie, we'll leave it there. Thank you so much. Bloomberg's Winnie Hsu covers Asian equities, joining us from our studios in Hong Kong here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. The brazen move last week by Donald Trump to snatch Nicolas Maduro from his home in Caracas also sent a clear message to Chinese President Xi Jinping. The Western Hemisphere has no room for another superpower. Let's take a closer look now at these dynamics with Bloomberg opinion columnist Karishma Vaswani. Karishma, thank you so much for being with me. Happy New Year to you. I'd like to begin by getting your view on Beijing's reaction to the U.S. move on Venezuela.
I mean, I think, by and large, first of all, I think the caveat that it's quite difficult to get a sense of how everyday Chinese people feel or think about this, except for via social media. And the comments that you see on social media have been split into two camps. One, this is just another affirmation of the fact that the United States is this evil empire that goes out there criticizing China, but it's very much, the sort of perpetrator of similar ills. And the idea that a nation could just waltz in and seize the leader of another country, I think, baffles the minds of many Chinese, not just people in China, but across the region, actually. I think on the flip side in China, and this has been reflected in social media as well, although authorities have clamped down on these sorts of comments, is a recognition that actually the United States and China are not that different. And Xi Jinping and Trump both share similar qualities when it comes to, for example, wanting to be commander-in-chief for life. And I've been, both amused, but also at the same time, I find that really interesting and revealing about how people in these two giant countries are looking at each other and actually have found more similarities in this particular age of indecent empires, if you will, than ever before.
So help me understand, if we can apply a little bit of context here, what China's relationship with Venezuela has been and how this may or may not complicate that strategy.
Well, in the first instance, it does look like on the surface, the removal of Nicolas Maduro from Venezuela would be a real loss for China. It is a big buyer of Venezuelan crude. We have to remember, of course, that the country only accounted for about 4% of its imports last year and its biggest creditor. It isn't clear yet what Trump plans to do with Venezuelan oil, although he has suggested that, he's willing to sell it to everybody. China could or could not be on that list. So and also, I should add that China is a big investor in Latin America. Venezuela was a big part of that strategy. So in the first instance, it does look like this could be a real setback for China. But I think, as I've written in my piece, that we should be looking at this in quite a different way. And certainly everything that I've been hearing and seeing and people I've been talking to in China suggest that this is actually an opportunity for China, because in the long term, if the United States does want to carve the world up in what appears to be spheres of influence, we've seen that in the national security strategy, for instance, then this is precisely what China's always wanted. It's wanted the U.S. to stay out of its backyard and not meddle in the South China Sea and not get involved in the Taiwan Strait. And if that's the kind of ideology or philosophy of how the world works that Trump is trying to sort of push forward, then that's exactly what China wants.
But there are other U.S. allies, and I'm thinking of Japan in particular, very concerned about how this action on the part of the Trump administration in Venezuela would embolden China to kind of move toward Taiwan. Does any of that dynamic keep China somewhat in check, whether we're talking about Japan or maybe to a lesser extent South Korea?
So I don't think that what's happened in Venezuela will change the calculation for China at all when it comes to Taiwan. I think these are two very separate issues. I know there's been a lot of parallels drawn, by analysts, but my view on that is that Taiwan for China is an internal issue. It sees Taiwan as its own territory, and the calculations that are involved in whether or not it will launch a quarantine or a blockade or, an invasion. And again, I don't think that's the way that Xi Jinping wants to go about unifying with Taiwan. I think he wants to win without fighting. I think those calculations are based on things like, is the People's Liberation Army ready yet? Is the domestic economy at a point where it could withstand what would be quite a heavy hit? And right now, neither of those things appear to be true. But what I do think the Venezuela, the sort of actions by the U.S. in Venezuela, what they do provide China is this sort of cheap ammunition, as one analyst put it to me, that if the United States can do that in a country that doesn't belong to it, the thinking in Beijing goes, then of course our territory is well within our rights to do whatever we want with. So it's more of a justification, as if China even needed that, to be honest. Rather than a sort of excuse to do the same thing, if that makes sense.
So we know the Trump administration has only been in office for a year now. We've got 3 years left in the term of Donald Trump. Is there a conversation around perhaps some mean type reversion after Trump leaves office? Or do we really have to grapple with the possibility that this is the new normal where the U.S. is concerned?
I think, a question I ask myself a lot in my reporting these days is, what does the world look like after Donald Trump leaves? And my estimation of that was that it was going to be at the next election cycle and the midterms coming up. And, somebody said to me the other day, what if it's not what if it's within the realm of possibility that timeline gets extended? And another thing that I think about a lot is, again, based on some of the commentary we've been talking about in Chinese social media as well. One aspect of this is just how much closer the Chinese and the Americans might be in the way that they operate in the world. And if this is the law of the jungle, if this is about might equals right, then that is something the Chinese know how to deal with and are very comfortable with. I think that the calculus for Beijing now is to find a way to get Donald Trump to make the trade war less painful for China. And I think those things are in play. And we will see a meeting between Xi Jinping and Donald Trump either in April or later in the year at the APEC summit in Shenzhen, or even the G20, for instance. And I think we will see moments where that relationship is tense and under pressure. But I think the long-term trajectory, while the United States and China continue to be strategic rivals, under Trump, I think the focus for America will be much more domestic, and that plays into what China wants. It
was only yesterday here in the U.S. that President Trump signaled plans to increase military spending by 50%. We're talking about $1.5 trillion U.S. dollars by 2027. Are you seeing evidence that countries in the Asia Pacific are really feeling like they have no choice now, but to add much more in the way of military spending?
Oh, yes, definitely. And this is a trend that is continued from last year. I mean, part of the issue, or part of the pressure point, I should say, came from the Trump administration itself when, they said this to allies in Europe, but they've also said it to countries in Asia. And they've said, you've got to increase your defense spending. Well, that's precisely what's happened. We've seen that with Japan, South Korea. Even India is expanding its naval capabilities, partly because of the threat from China, but also because of the insecurity that they feel now, these nations, that in the past, there was this sort of tacit understanding that the United States would be there, the security guarantor of last resort, if you will. I'm not sure that everybody feels the same way now. So what you have, the situation that you have now is countries arming themselves and, building up their defense posture. And I think that's going to continue.
Have you thought much about how these events might redesign trade relations, particularly between China and the United States, or to a lesser extent, China and Japan, China and South Korea, China and India?
I think what we will see is the role of middle powers becoming, for want of any other option, becoming more prominent, or at least the attempt to become more prominent and rely on each other as these superpowers continue to behave as badly as they are. You've got countries like Australia, Japan, India already trying to come together in some sort of grouping. Singapore, which is the emblem of small power influence, I suppose, making those kinds of noises where, it's saying that the United States is now a sort of landlord seeking rent and trying to sort of make the case that we need to go back to a rules-based order. But I think right now the situation is in such flux that these countries are constantly scrambling, one, trying to deal with the impact of the trade war and the tariffs that the Trump administration has put on them, and two, dealing with the fact that as China has been shut out effectively of the U.S. market, it is dumping goods in these countries. I put a piece out before Christmas about how the $1 trillion surplus that China recorded last year, towards the end of last year, is having a direct impact on some of these developing countries that it says it wants to partner with and has been, investing in. And Indonesia is a case in point where there have been job losses recorded in many of the factories that, in the past would have given jobs or provided jobs for a youthful demographic that instead is very worried about and insecure about its future. And I think there is a link to be tied to some of the Gen Z protests that we've seen in these countries to job insecurity and the way that the Chinese economy is operating right now as a result of the tensions with the United States. So it's a really, I don't want to start the new year off with this abysmal picture, but I'm afraid I have no choice really given the events that we're dealing with.
Well, there is a tremendous amount to consider, and I think you've helped summarize it very, very well. Karishma, thank you so much. Happy New Year to you. Bloomberg opinion columnist Karishma Vaswani joining us here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.